Hello and welcome back. I'm Natalie MacDonald and you're watching Dukascopy TV. It's a Monday, so kicking things off in the studio, I've got Jean-François Owczarczak of MJT to discuss some of your favourite pairs. Jean-François, hello, welcome. We hope you had a pleasant weekend.
Hi, Natalie, thanks for having me back.
No problem. Okay, let's take a look then.
Okay, I'm starting with the hourly mosaic on our usual suspects, meaning euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, S&P futures, and the 30-year T-bond futures. And what was interesting last week is that the dollar made a correction up, the euro took a correction down, and I just wanted to have a closer look to see if that is the beginning of a longer-term euro weakness or not, and highlight a few levels which could be some trigger point in this euro weakness.
Dollar demand was up last week following that US jobs data. So how is this working into this relationship?
Well, in general, the theme that we've been seeing underlying any dollar strength since the beginning of the year is back on the agenda, meaning that the US economy is accelerating quicker than the European economy, that the prospects for interest rate rises are closer in the US than in Europe, and that this interest rate differentials should be beneficial to the dollar. Well, that theme has been underlying the pair since the beginning of the year. The real answer is not out yet, so we've had quite reduced volatility since the beginning of the year. And the big question is that are we able to come out of this pretty flattish consolidation to the upside or to the downside? And our investors' view here on the euro dollar reflects that quite nicely. So an investor's view is a combination of a weekly long-term chart, of a daily medium-term chart, and on an hourly short-term chart. And the weekly is still in the bull trend, but as we can see, it's only a correction up. That means that from the bottom here in 2012, we've had what is a standard correction in what was supposedly a downtrend previously. Now we would really need to make it above the 141 level, or exactly 140.62, to create anything more meaningful on the upside for the euro. So at the moment, we would consider that this correction up is finished. We haven't yet resumed the downtrend, but we are in a situation where we might be in a position where it could happen. That said, we would have to watch that 140.62 level, which would be the trigger for an impulsive move up. So pretty much capped to the upside at the moment. To the downside, we've had this initial correction since the month of March. We've reached our target about a month ago, and we are attempting to resume the uptrend. And also here, it's very interesting as to really create anything more meaningful to the downside this time, we need to make it below these corrective targets. And the corrective targets are around 134.87 or just below 135. So as long as the euro holds above 135, we could still label this price move as being just a correction. And to create anything more meaningful, we'd have to make it below the 135 level. So let's now turn to the hourly and to the correction that we saw last week. And basically to accelerate and give it a chance to move below 135, we also have an interesting level here, which is around 135.75, which is the corrective target of the hourly. And if we made it below it, we'd turn impulsive on the hourly, probably triggering a stronger move towards the 135 level and eventually breaking the 135. But as long as it holds here, we're pretty much seen, we could label this as only a correction for now. And it means that this attempt to resume the uptrend is still valid. So a bit of a wait and see situation on the euro in this long-term consolidation that we've been seeing, and with trigger levels at 135.75 and just below 135 on the daily.
If we head back to the mosaic and take a look then perhaps at the sterling dollar, what does this performance say then similarly about the euro weakness story that we're seeing?
Well, what we're seeing is that the correlation that we have had or historically had between the euro and sterling is not there anymore, not as much there anymore. But we could really see when we look at all the different price moves, and it's probably interesting last week, because over the first 2 days we had quite a lot of dollar weakness, euro strength, sterling strength, and then the euro started to consolidate down. Well, the cable stayed pretty much flat. So every time the euro corrects down, cable stays flat. Every time the euro moves up, sterling moves up in sync. But it's been going on for a while, and I would, although it is still in a bullish mode, sterling is slowly getting quite overvalued in terms of our targets. There's still, on the weekly, it's still in a bull. There's still a bit more to go. We could justify maybe another 8 figures. But however, on the daily, we think it's going to have to take a breath, because it's almost reached its impulsive 2 targets. There's maybe another 1 or 2 figures to go, but it's quite clearly overbought at the moment. So we'll probably, over the next few weeks, start to see a bit of weakness. Might be just a flattish consolidation, but we believe that the momentum that we've seen over the last few months, or at least over the last 6 weeks, is probably going to take a breath over the next few weeks. Now, we could confirm that over the short term, because we've also reached here the impulsive targets. So it's pretty much overvalued on the hourly, pretty much overvalued on the daily, and over the longer term there's probably a bit more to go, but in the meantime we should see a cable taking a breath.
Okay.
And then maybe interesting to look at equity markets. Equity markets are still in an uptrend, have been for quite some time. We believe that we don't want to fight the trend at the moment, but it is a very difficult game, because also here we're very much overvalued, or not overvalued, but well valued. The impulsive targets have been achieved. We could see there's probably a bit more to go on a very aggressive E2 target here, between 2,000 and 2,200, with a prospect over the next 1 or 2 quarters. But in the meantime, it also seems very overvalued over the daily. So also here we think there's probably going to be a breathing period on equity markets.
Many have commented that US stock market performance has become divorced from the actual fundamentals, and looking at this, really that seems to continue to be the case.
Well, I mean, the market and the economics are not always in sync. Some say that the market anticipates, and it has been anticipating that we should be having some growth over the next few quarters. Now, the market has also been the first one to anticipate when we think that growth is going to start to slow down, or if the prospects may get worse over the next 6 months or so. And people usually say that the market is 6 to 9 months ahead on the economy. So at the moment, it seems that the economy does have momentum, that it can continue. The market seems to believe in it, but if the economy was to start turning down in about 9 months' time, the market is going to give us warning signals well in advance. At the moment, we think it's not quite finished. It's expensive. Over the longer term and over the short term, we should see a bit of softness. And maybe finish off on gold. Gold is an interesting one because it highlights how to use our markets in 3D with our trend analysis over 3 investment horizons. And we can see the longer term is still in a downtrend, and it probably still has about 2 quarters to go. It was well oversold back in December, but we did label this as an intermediate bottom. And the question is always, when you see this kind of consolidation, are you in a reversal pattern, or are you in a mere consolidation that's going to resume its downtrend? Well, at the moment, the weekly is still telling us that this could only be labeled as a correction or a counter trend move. Over the short term, or over the medium term, sorry, the daily is still heading up. But also here, I really need to see a second leg up to confirm this uptrend. The envelopes have slightly turned positive since the green targets here, which are quite aggressive. But as you see, the risk index is already quite high, quite close to the overbought. So I really need to see a confirmation of this move up at the moment. And the first confirmation we could probably see is that on the hourly, we've reached our targets over the short term, and we're probably going to enter a consolidation period. I sure don't want to see it accelerated to the downside. So as long as we hold here, I would want to justify a second leg up, but I'll be watching this correction very, very closely.
Jean-François, thank you very much.
Thank you for having me.
A mixed bag there today from Jean-François. However, do stay tuned to Dukascopy TV to see if his forecasts go into fruition. Thanks very much for watching. Goodbye.